Well, let's talk about the next company, JSW Infrastructure. The ports company is in focus. They saw a muted start to the first quarter. Their volume growth in Q1 has been impacted by maintenance shutdowns. To discuss some of this in detail, we're now joined by Arun Maheshwari, Joint Managing Director and CEO at JSW Infrastructure. Mr. Maheshwari, great to have you with us here. Thank you for your time. Prashant this side. Soft start to the year, we understand that volumes were impacted by maintenance shutdowns at Dolvi. Is that back up again? Is it up and running now? And second quarter onwards, can we expect volumes to come back to the 30 million ton run rate?
Yeah, the shutdown is over, and we'll maintain our guidance of 10 to 12% growth year-on-year basis for the full year volumes.
Okay, do you stick to your guidance that you gave earlier of 10 to 12% volume growth? And the second half, will we see a resumption of the Dolvi plant? Also, what is the kind of inorganic volume growth that we're looking at?
So, Navkar capacity, we are not adding up to our volume guidance, what we had projected earlier. But rest of the year, we expect 10 to 12% for sure. We'll be able to achieve that.
Well, tell us about the agreement with JSW Steel. This is sizable to your business, 30% of FY24 sales. You say it will generate mid-teen IRR. What's the rationale? And you envisage that shareholders push back from JSW Steel. What is the quantum of EBITDA contribution that you see from here?
Connectivity deal, because if you see our journey, we have been getting into the port connectivity, whether Navkar we talk about or whether slurry pipeline we talk about. It adds volume to our overall business, and to our port businesses becomes more and more robust by virtue of such deals. So this is one deal, such deal, which will greatly add value to our stakeholders. And it's completely in sync with our target of port connectivity projects. So I expect this to add decent volume and decent growth to our bottom line and top line both.
Mr. Maheshwari, give us a sense of the tax rate that will be applicable Q2 onwards, the effective tax rate going forward, and any tweaks to sort of, your internal assessment of PAT estimates.
So PAT remains as robust as it was. So this quarter PAT, if you see, it is a bit compromised. This is largely because of accounting entry. Last year, same quarter, we had a forex gain of about 87 crore rupees, which was not there in this quarter, which was an unrealized gain, and it's more to do with the accounting entries. So I think we remain as robust operationally as we were earlier. Going forward, our tax rate, if we say, in some ports, our Section 80I benefits are getting exhausted. So we'll maintain around 24 to 25% kind of tax rate would be there.
Okay, sir, but tell us about the rationale behind the acquisition of Navkar Corp. How does it aid your portfolio? How much JSW Group volumes was it handling? And also give us a couple of operational metrics as well as financial metrics, the improvement that you're looking at.
So if you see our journey, we started in 2002, 2004 as a captive port company. Till good 15, 16 years, we were doing only captive businesses. Thereafter, we ventured into the third-party businesses, which was 6% in 2019, grew to 50% in Q1 FY25. This is the natural extension of Navkar. You serve through the port to our customers, and thereafter you have to get into the last mile connectivity, last mile delivery, customer delight, and making the customer more and more stickier to you. So this is one such step we have done. It's a natural progression for any port company to get into last mile connectivity. This is where we are getting into the phase now, and Navkar is first such acquisition for us. So we would like to make operationally very, very robust this particular company. Very, very strategic locations. They are rail connected, whether it's in Mumbai or whether it's in Gujarat. So far as JSW volumes are concerned on Navkar, it's very minuscule. Rather, I would say maybe around 5% of the total volumes would be JSW Steel. Otherwise, it's a very, very independent, and it is largely targeted towards the inland deliveries for containers or stuffing, de-stuffing, or cement players and other people.
So you've mentioned a lot of scope of growth after signing the concession agreement with Chidambaram Port in Tamil Nadu to develop a new 7 million ton cargo berth, and also further discussions are underway for equipment specs and ordering. Can you tell us a little bit about that?
It's one of the very, very fine acquisitions or bidding, securing a winning bid over there. It's an operating terminal. This is an operating port. So hinterland is very rich. About 10 to 12 million ton of cargo is immediately seen within next 20 to 50 kilometers of that port, and there is absolutely no competition nearby over there. We expect it to be operating almost 80 to 100% in the first year of operation itself. So we feel it's one of the finest bidding when what we have done in the recent past.
Mr. Maheshwari, you had mentioned a 30,000 crore capex plan, rupees 30,000 crore capex plan. Can you confirm this figure? And what are the other new opportunities? You said in last mile connectivity, Navkar is the first such step. What are the other opportunities to deploy this money?
So these 30,000 doesn't include any of the acquisitions, because acquisitions we don't know how much we'll do and what we will do as the opportunity comes in. These are the defined and identified project which we have done so far. Few of the things we have already mentioned in our previous calls, whether it's a Keni or Jatadhar or upgradation of Tuticorin or upgradation of Jaigarh Port, Dharamtar, JNPA. Then a few more investments into nearby Navkar and other terminals. So these are defined projects what we have, ancillary pipeline I just mentioned. So these are defined projects what we have laid down till 2030. Any acquisition or any further bidding to any of the terminals or any other opportunity coming up, it would be over and above 30,000 crore rupees. It all depends upon how the balance sheet fares and how we see the leverage ratios in our system.
Okay, well, that is on the capex. But I also wanted to ask you about these reports indicating that JSW Infrastructure is set to win the Murbe port deal. What is the official word here? What capex is required? How is the location good for you? And what volumes can be seen?
So we are awaiting, as of now, Maharashtra Maritime Board's outcome. If it comes to, then it would be a very good value addition, because the way our Dolu plant is expanding, the way we see our Wasin and Tarapur plant expanding, and the nearby hinterland what is there, this port will certainly help us to develop that. But as of now, we are awaiting feedback from Maharashtra Maritime Board.
Okay, thanks a lot for joining in. We'll